Very good morning. These are the top business stories live from the Sky newsroom. With the head of the world's fourth largest car maker, Stellantis, who own Vauxhall, stepping down, we'll be looking at what's going wrong with Europe's car industry. Vape producer Supreme gets the taste for Thai food and buys the British tea company out of administration. And the Lloyd's UK Business Barometer reports a dip in confidence, with hiring intentions falling. Very good morning on this Monday Business Live with me, Darren McCaffrey. Carlos Tavares, the head of the world's fourth largest car maker, Stellantis, is stepping down after nearly 4 years. The group, who owns Vauxhall, plus Citroën, Jeep and Ram, has decided to make this happen because it comes about falling sales and increased competition, especially in the crucial US market. Well, in its third quarter, Stellantis posted a 27% plunge in net revenues. In cash terms, that's net revenue of £27 billion in the 3 months to the end of September, down from £37 billion last year. Particularly badly hit was North America, where revenues plunged by 42% to £10 billion. Well, let's speak to David Bailey. He's Professor of Business Economics at Birmingham's Business School of University of Birmingham. David, very good morning to you. Has this come as a surprise, given those falling sales?
So we knew that he was going to be going in 2026. I mean, the dismal performance in North America really prompted his kind of longer-term leaving. However, I think things have now got so bad at the company, particularly in the US context, that has now fed through to him going much more quickly. And there's clearly been a big disagreement on the board about the way forwards. But essentially, when every stakeholder, suppliers, workers, dealers and investors are unhappy, his position wasn't sustainable.
So talk us through what is that disagreement?
So I think he's been very good and, a world kind of leader in the industry in cutting costs. So he's really ruthlessly cut costs after the creation of this massive company, Stellantis, the fourth biggest car firm in the world. Going forward, is that the only thing that they can do? I mean, they've been ruthless about cutting costs, but they've also got to have the product to get in front of the consumer. They've fallen behind in terms of product development in the US, where they have a very dated lineup. They'd also tried to push prices too high, and essentially stock hadn't shifted. So they're now having to cut prices and do other things. But essentially, they're going to have to develop new products, electric vehicles in particular, and I don't think they can necessarily do it on their own. They're going to potentially have to look for partners.
And David, this obviously has an impact in some ways here, or does it? I suppose my question is, how much does this bled into the decision we saw last week with Luton and the decision by Vauxhall, which Stellantis owns, to close its plant there?
So Stellantis have been looking to cut costs, cut capacity and close plants. And Luton was always going to be vulnerable because it was a small plant. And also, it's easier to close operations down in the UK. We've got a very flexible labour market. That's great for creating jobs, but also destroying them. So Luton, I think, is sadly gone. I think the big question going forwards is if there's a new boss at Stellantis, what does that mean for the other UK operations up at Elmsmere Port? And Carlos Tavares and Stellantis more generally have been very critical of the operating environment in the UK, both after Brexit, but also in terms of government policy. So there's going to be a question, I think, about the future for Elmsmere Port under new management. Now, hopefully, the investment coming in will secure it in the short to medium term, but that's not a guarantee.
Wow, so it could be up in the air. But also, David, isn't this a reflection in many regards of just the real fundamental problems, particularly with car manufacturing in Europe, which really is in the doldrums at the moment, and potentially with tariffs coming from the United States with no real escape hatch?
No, that's absolutely right. I mean, there's a kind of perfect storm. So a huge downturn in the Chinese market, which is the biggest market in the world. That's really hit car companies in Europe. We've seen as well Chinese brands starting to penetrate Europe in a very big way, hence the tariffs from the European Union. I think the UK is going to have to think about doing something similar. We've seen stalling demand for electric vehicles in the West, which has meant they're not getting the returns in on the shift to EVs, and they're having to pivot to making EVs, which is expensive in terms of investment. So put all of that together, and much of the car industry is reporting declining profits. They need to cut workers, cut capacity. Stellantis is no different in that sense, but it's got this huge problem in North America, which has ultimately brought the CEO down.
Yeah, really fascinating. Factories closing in Europe, job losses here, and we'll have to watch out, as you say, for that future investment, whether it is secure in Ellesmere Port. David, as always, appreciate your excellent analysis. Thank you very much. David Bailey there from the University of Birmingham. Thank you, David. Now, the vape and battery maker Supreme is to buy, wait for it, the historic British tea company Typhoo out of administration for some £10.2 million. Typhoo was established 121 years ago, but appointed administrators last week following several years of declining sales. Well, earlier I spoke to Supreme's chief executive, Sandy Chadha, about why he's bought this great British brand.
I grew up with the oo in Typhoo. So yeah, it resonates quite a lot for me from being young and growing up. So that's one of the reasons. The other reason is I think it's still got good opportunity to revive itself. So those are the main reasons why.
So I suppose, the big question is this an emotional connection? I mean, you sound like you are a Typhoo tea drinker, or is this more a rational business decision?
No, every business decision we make would be completely rational. I would never make an emotional decision.
OK, well, fair enough on that. Then the question is, you say it's a household brand, and for some it is, but I have to say, for me personally, I mean, I can't remember the last time I had a cup of Typhoo tea. The reason it's clearly been acquired and at what 10 million quid is because there are millions of people like me. I can't remember the last time I saw an advertisement for it. It is a brand that has diminished over the decades. Let's be frank about that.
Yeah, so look, it has, less than probably at 2% market share. So the market share has gone down a lot over the last, 10, 15 years. I think it just needs to be loved again. It still has sales over 20 million. So, in terms of revenue, we still believe that we can grow that top line growth. We've got some really good ideas. We've got some really good new MPD that we're thinking about, new product development that we're thinking about as well. So, yeah, I believe we can. I believe we've got the money and the firepower at Supreme to do that as well.
In saying that, I mean, it's not just Typhoo tea. Tea sales are down. We've kind of fallen out of love a bit with tea in this country. Why are you optimistic then when other big brands, like PG Tips, Yorkshire Tea, Twinings, are also not seeing the sales they used to do decades ago? We're drinking lots more coffee than tea these days.
Yeah, you're absolutely right. But there is a lot of trend moving towards iced teas. There is a definite trend, especially with the younger generation. That's something certainly we look at. I mean, we have a drinks manufacturing business that Clearly Drinks that manufacture drinks. So for us, it makes a very good sort of add-on to our portfolio under the brand name if we can get that right. So seasonality wise, tea for winter and hopefully iced tea for the summer.
OK, well, we'll see. There are 100 people employed. And then again, doesn't seem like very many. What's going to happen to their jobs?
Yeah, so there's actually about 23 people employed, so not 100. So I'm not sure how that is. I think that was 100 when they had the factory many years ago, but now there's only 23. So there's not a lot of people really involved in the business at the moment.
Are you planning to grow that number, or is that likely to diminish even further? I mean, that for a brand that you argue is so well known, the fact that it only employs 23 people, to an outsider like me, seems slightly insane.
Yeah, I know. I mean, look, at Supreme, we employ over 500 people. And, I think when you're a manufacturing business, you do need to employ a lot more people. But when you are not manufacturing, and we have no plans to change our British manufacturing, then you really then need sales, marketing and support. So 20 to 30 people, even though it's a big brand, is relatively small, as you said, at the moment, in 20 revenue. So it's about right.
There you go. That's the new owner of Typhoo Tea. Now, UK business confidence dipped in November, according to the Lloyd's Business Barometer. And while that confidence remains well above long-term levels, firms are warning that overall hiring intentions are starting to fall. Well, let's speak to Han-Ju Ho. He's senior economist at Lloyd's Banking Group and joins us. Very good morning to you, Han. Just what have you found out? You do this every couple of months, don't you? What is the latest in terms of confidence in the UK and about where businesses are?
Yeah, I mean, we do this survey every month, and we've been doing it for over 20 years, in fact. What businesses are telling us, well, two things really. The first thing is that their confidence regarding the wider economy, the external environment, if you will, has fallen back since the summer. But the other key message from the survey is that businesses tell us that they're in a good place to weather the risks and challenges ahead. So trading prospects, for example, has actually improved this month, and they've remained resilient since the summer.
Well, that is interesting because we've heard a lot from businesses, particularly in the last month, talking about their concerns about tax hikes, the prospect of an inflationary start to next year. And yet you seem to be saying that maybe that's a little bit overblown.
Yeah, it's interesting. I mean, compared with other surveys, I think our survey is less one-sided in terms of results. And our survey is a bit more mixed. It's certainly not 100% positive, but I think it's more balanced. I think firms are telling us that they're a little bit more worried about the economy. But as I say, they're in a good place for the time being at least, they're in a good place to meet those challenges.
So where does the optimism come from then? Why are they thinking, actually, you know what, the coming year is going to be not that bad for us? Is that consumer spending? What is it, given some of the challenges that they're facing?
Yeah, I think businesses are certainly not complacent, and they are aware of the challenges ahead. I think if we step back and look at where we were, let's say 2 years ago, at the end of 2022, when inflation was double digits, interest rates were still going up, and we had the aftermath of the mini budget as well. Since then, confidence has gradually improved. Interest rates are starting to go down, and inflation is back near target. So, when we ask businesses what their biggest concerns were and are, it's interest rates and inflation. And the fact that those are coming down or have come down, I think explains to a large degree why overall confidence is still at a pretty decent level. OK,
really good insight there. And thank you very much indeed, Hanju Ho there from Lloyds Banking Group. Thank you. Now, defence and aerospace giant BAE Systems is recruiting more than 2,400 new apprentice, undergraduate and graduate roles in 2025, with the company's investment in education and skills expected to reach £1 billion since the start of the decade. It comes amid increasing global uncertainty, with many countries, of course, increasing their defence budget. Let's speak to Brad Grieve. He's Chief Financial Officer for BAE Systems. Brad, so this is quite the investment, frankly. How much is it needed, if you like?
Yeah, good morning, Darren. Well, we're growing. I mean, our company this year will grow between 12 and 14%. And we have a backlog of £74 billion. And beyond that, incumbent positions that are equivalent to about £180 billion that aren't yet in the backlog, but will be. So we've got a very strong growing business, and the outlook for the future is quite strong for us as well. So, to drive that growth, we need a lot of resources. And that's why we're really excited to announce the numbers that you just went through today. We've got 2,400 early careers expected to land into the company next year. And that will bring the total to 6,500 across the UK workforce that are in training across these different programs. That's 15% of our workforce, Darren. So that's a pretty big number for us.
In saying that, you talk about prospects, Brad, and we did see, BAE Systems take a hit last week. I think £2 billion concern about what the impact might be from the incoming Trump administration. Is the concern that you think from investors, should they be concerned about President-elect Trump and maybe an America First strategy that could hit you guys hard?
Yeah, there's a lot of noise out there. I think the key is to focus on the strong signal, and that is the sad reality that geopolitical risks are growing. And, our company is very well placed to support what is bipartisanly supported defense spending. And I think in the U.S., if you look at what we do in space at BAE Systems and the acquisition we made with Ball Aerospace, that plays right into the priorities of a Trump administration. And they've also talked about the need for allies to back themselves more. And I think the UK and across Europe, defense spending is going to have to grow to reflect that. So I think underneath all the noise that you may be referring to is a pretty strong signal that gives us really good confidence about how we're going to be growing. And that's something that I think will survive this noise that you're talking about. We see a very strong backlog, as I mentioned. Our program is really well aligned to national defense strategy in the U.S. And so, I think when you unpick all of that, we've got a business that I think is going to grow from strength to strength.
It is interesting. I mean, I know 40%, I think, of your revenues come from the US, but the British government today suggesting they actually want to rely on British manufacturers more, which should be good for BAE. My final question is, how ready are we? How prepared are you guys if we do need to ramp up? We don't know what's going to happen in the future, our defence capabilities in this country. Have we, at the moment, got the ability to do that?
Yeah, of course, we're investing for those types of scenarios, and we've got very strong government support here in the UK, and we've been investing significantly more capex than we probably have ever done before in the UK, and so you can see that in the shipbuild hall in Glasgow, in the skills academies that we're building, which support these early career programs. So we've got a skill academy we just opened up in Glasgow, and that complements what we've done in Barrow and in Lancashire and to support our air program. So, we are investing capex to support growth and to improve defense capability for our government.
OK, Brad, thank you for your time. Brad Grieve there from BAE Systems. Thank you. OK, you're watching Business Live here on Sky News. We're going to take a quick break. Coming up next, we'll be looking at how the markets are doing this morning. Very little movement on the FTSE 100, up ever so slightly. All the details in just a couple of minutes.
Trust in politics is at an all-time low. What's going wrong and can we fix it? It's from Liz. She wants to know, why is there still no sign of the Labour Party electing a woman as leader?
It's sort of embarrassing. It takes a very strong man to be leader, but it takes an even stronger man to support a woman for leader.
If you want to be mean to politicians, crack on. The activists that go out and make elections happen, I kind of feel just don't be horrible to them. Be polite to them in the same way that they're polite to you.
Keir Starmer has got us into government with a big majority. He was completely clear before the election that he wasn't going to be able to do the two-child benefit policy, but I wouldn't be surprised if it isn't an early thing that comes along.
I went up to Gordon Brown and said, hello? No, yes, where is it? I said, found all these Tory candidates breaking land. Let me see it. This is brilliant.
I'm Martin Brunt, and I'm Sky's crime correspondent. My most memorable story was, and still is, the disappearance of Madeleine McCann.
Please, please do not hurt her. Please give our little girl back.
We aim to be the best and most trusted place for news.
For detectives, the first 48 hours after a murder are crucial in the search for clues. The public expects them to find Jill Dando's killer soon.
I remember the grimmest case, the Soham murders of schoolgirls Holly and Jessica. I felt I can't undo what's happened, but I can help explain it.
Ian Huntley was arrested and charged within a fortnight of the murders.
My biggest challenge was to persuade a jailed diamond thief to answer my letters. Martin Brunt, Sky News, at the Old Bailey.
Welcome to the world.
Our new podcast, starting now. It's very exciting. Every week we'll be reporting from the world's trouble spots.
We get to hold those in positions of power accountable, and we get to ask the questions that the audience, the listeners, want to know about.
And that's why it is so important that people tune in, come along for the road, come along for the journey. It'll be fun.
Very welcome back. We're just going to bring you some breaking news that's come into Sky Centre, and that is the head of the media trade union Bectu has issued a pretty strongly worded statement in the wake of the allegations against the BBC director Greg Wallace over the last week or so. Let's bring you that statement from Philippa Childs, saying that misogyny, intimidation, ageism and sexual harassment should have no place in modern workplaces. Yet time and again, we see that these issues continue to run rampant in the creative industries, propped up by inadequate reporting mechanisms, a lack of accountability, and an industry that enables extreme power dynamics and untouchable talent. Reports that the BBC previously internally investigated complaints about Wallace concluded that aspects of his behaviour were unacceptable or deeply troubling. Is it any wonder that film and TV freelancers think twice about sticking their head above the parapet? So that is the statement there from Philippa Charles, head of Beck 2, about the allegations into Greg Wallace. As I say, we've just received that statement, and we'll have more at the top of the hour with Jane Secker. OK, let's bring you up to date now with the markets on this Monday morning. We're going to start with Asia Pacific, where they've traded mostly higher as the region kicks off a week of heavy data up across the board there. I see it blue this morning. Let's also look at what's happening with Europe, I think, where shares have tumbled around 8%. The latest tariff threats from the US President-elect Donald Trump are also in focus as the world gears up for a potential escalation in trade tensions next year. Here in London, the FTSE's mostly unchanged after the date showed a deterioration in manufacturing, both in the Eurozone and here in the UK. On the foreign exchanges, the pound down a little against the dollar this morning at 127, up though against the euro by half a percentage mark. I'm sure people in the Eurozone concerned about the French economy, up to 121. I can't remember the last time I saw the pound that high against the euro. And let's just briefly look at oil and the cost of a barrel of Brent crude, up just over 1% at $70.65. Well, let's speak to Russ Mould on this Monday morning, Investment Director at AG Bell. Russ, very good morning to you. Actually, let's start, if we can, with Stellantis, the big story today. What's your take?
Good morning to you, Darren. Yeah, I think it's an ongoing process that we've seen at the company of continued sales disappointments, the struggle to adapt itself to the shift towards hybrid electric vehicles, which then probably hasn't happened as quickly as many would have hoped or would liked. I guess what's interesting looking at it in terms of how financial markets view these things, the company's current stock market capitalization represents 6 times this year's forecast profits. At Tesla, its stock market capitalization represents 100 times this year's forecast profits. So clearly the expectation is that Tesla's profits will continue to rocket and that Stellantis' profits won't.
Yeah, it's a really interesting time in the car manufacturing industry, not least of all, here in Europe, where lots of those big firms seem to be in a lot of trouble. Let's talk about Topps Tiles, if we can. Household brand name, but one whose share price is not performing particularly well.
No, the share price is back to where it was really during COVID in the first wave of lockdowns, and that's prompting some frustration, to put it politely, from a major shareholder, the Austrian investor MS Gallion, who owns a stake of just below 30% in the company. They've been going public with their discontent, arguing they're not being listened to by the company's management team. And the company's chair, Paul Foreman's come out with a statement today saying that A, the company has the full backing of its shareholders, and B, it's committed to a strategy that it outlined very recently designed to grow its sales by roughly 50% over the medium term and increase profitability. I mean, the Mission 365 plan is what it's called, to get sales up to £365 million. That's nice, but growth isn't a strategy. It's what results from strategy. So really the onus is now on management to prove that it can continue to develop its online business, continue to break into the trade businesses to supplement its strong position in retail. And although the company does say it has retail, it has investors backing, the fact that the share price is still drifting lower would suggest that some of them have at least started to vote with their feet.
And let's talk about Unilever, another massive firm. And they seem to be trying to get rid of some of the food business. I think we talked a couple of weeks ago about their ice cream business. Is this the same thing that, they're trying to offload some of that food business?
All part of the same strategy. And this is Hein Schumacher, the chief executive, talking to the Dutch financial press, Het Financiële Dagblad, if I pronounced that properly. And I think it kind of echoes what he said at an analyst meeting back in October, whereby they're continuing to focus on what they view as their power brands, their strongest products, higher growth geographic markets and higher growth product markets. And they're suggesting here that, some of these food businesses, which haven't been named, but they're thought to be European, don't fit any of those categories. They've got combined revenues of around $1 billion, so they're looking to sell them if they can, although not at fire sale prices. As you say, Darren, they've already sold the tea business, looked to sell the ice cream business, haven't found a buyers. They're now looking to maybe spin that off. So again, that comes back to maybe the price that they can get for the assets that they feel no longer fit with the company, but all part of a master plan to drive sales growth and drive margins towards their medium-term targets.
And Russ, just while I've got you, and just finally, can we talk about the currencies, if that's all right? Particularly the euro, taking a hammering at the moment, I assume in part because of what's happening in France. But if we look at those currency figures, the euro's heading for parity against the dollar at this rate almost.
Yeah, I must admit, Darren, my record at forecasting foreign currencies is so bad that as soon as I say something, everybody watching your programme will probably go and do the opposite. But, I think it's fair to say that I think France is, we spent most of the last decade worrying about Greece or Italy or Portugal or Spain as perhaps the fault line in the European economic edifice. Attention is now turning to France. It's got a very high debt to GDP ratio. Interest on that is gobbling up a big percentage of the tax revenues of the country, and it's struggling. You could argue, like the UK and the US may have to at some stage, to try and find some revenues to help plug that gap. And so that's what I think economists are getting increasingly concerned about.
OK, Russ, thank you very much indeed for joining us there. Russ Mould from AJ Bell. As always, really appreciate it. Thank you. That is it from me on Business Live for the time being. Back at 4:30 this afternoon. We're going to be talking about cinemas, so do join us for that. Coming up next, though, more on that breaking news story in the last couple of minutes. That is that BEC2, essentially the entertainment industry's union, saying that the complaints against Greg Wallace are deeply troubling. We will have more with that in Jane Secker in just a couple of minutes here on Sky. Do stay tuned for that. I will see you later on this afternoon.